the runaway rally in public sector banks may soon run out of steam. Analysts indicate markets have priced in most of the positives and the road ahead will depend on each bank's respective financial performance.
Surprise is not left because now that is to a large extent priced it. The surprise was for PSU banks. They also came back to credit growth and they caught up with the industry credit growth and improved the credit growth. But why I'm optimistic is that instead of surprise, I would say two structural changes. One, last 5-6 years, the whole industry was worried about net NPA of the banking sector. Now, last two quarters, the net NPA is going down. This is one major structural change. So, when NPAs are down and on the declining path and the credit growth picks up, what happens? The incremental impact will be there on the profits. Because as you grow faster, more profit before provision, but your need for making provision will be relatively lesser. So, the bottom line expansion would happen.
PSU lenders posted an improvement in operating performance in Q2 led by 3 to 8% loan growth quarter on quarter across the board. Deposits, however, saw modest growth in the range of 0.5 to 6.8%. While margins expanded up to 31 basis points, gross NPA ratios improved up to 177 basis points quarter on quarter. In comparison, private banks posted a sequential uptick of 2 to 6% in credit growth with average deposit growth of 5% quarter on quarter. Analysts feared the financial performance of PSU banks may come under pressure in quarters ahead as they begin raising deposit rates.
The impressive credit growth in the economy, now running at around 17%, and the rising interest rates are the fundamental reasons behind the superior performance of banks. Since the interest rate on a bulk of the loans are benchmarked to policy rates, the 190 basis point rise in repo rate and the less than proportionate increase in deposit rates have boosted the bottom lines of banks. Going forward, the PSU banks will continue to do well for a few more quarters, but their margins are likely to come under pressure from the rising deposit rates.
On the bourses, the Nifty PSU Bank Index has valued 70% from its June low. The Nifty 50 Index, on the other hand, has surged 21%, while the Nifty Private Bank Index is up 33% during the period. The steep rally has narrowed the valuation gap between public and private sector banks. According to Bloomberg data, the price-to-book value of 8 of the 12 Nifty PSU Bank Index constituents is between 0.9 times and 2 times. These include Indian Overseas Bank, SBI, Bank of Maharashtra and Bank of Baroda. For the remaining 4, it ranges from 0.64 times to 0.85 times. In comparison, the PB for private banks runs between 0.5 times and 5 times. Analysts say the current valuations leave little room for upside.
This is the time to start taking profits from PSU banks because historically they were always around one-time book value, adjusted book value, because their credit growth is much inferior to the private sector bank credit growth. Now these banks are trading at half of adjusted book value. Now they recover to almost one time. So which is a fair value if you go by historical standard. I would say that not more than 5-10% upside for public sector bank, but on the contrary, they can correct 10-15% also, because as I said, some of the banks even trading at 1.3 times, which is in line with the historical valuation for them. But private sector banks, I feel they would be outperformer in relation to the Sensex and Nifty. So I believe this is the time to shift from PSU to private sector bank.
On Thursday, investors will react to the Q2 GDP and IIP data released after market hours on Wednesday. Besides, they will track auto sales and manufacturing PMI data. Globally, the fine print of US Fed Chair Jerome Powell's speech will guide the mood.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.